one of my favorite REITs, VICI Properties, just released their quarterly earnings and they were great. So what we're going to do in this video is go and look at VICI Properties' most recent quarterly earnings. We'll be looking at their future forward guidance, and then we will be looking at why I'm so bullish on the company. So if that's content that you would be interested in listening to, I encourage you to watch the video. And if at the end of the video you like it, I encourage you to give it a thumbs up. So without further ado, let's go and dive right into the video. So if you've been watching my channel for a while, you should be familiar with this spreadsheet. It is my investment tracking spreadsheet for my YouTube dividend growth portfolio. Now, as you can see here, VICI Properties makes up about 4.05% of my total YouTube dividend growth portfolio. I actually made a video a couple of weeks ago on VICI Properties business. I went over their financials and why I'm so bullish on the company. So if you haven't watched that video, I'll leave a link for you in the description below and a link in the top right hand corner, which you should be seeing now. Now, without further ado, let's go and dive right into their earnings. So VICI Properties announces their third quarter 2023 results, reported 20.3% year over year revenue growth. Great growth here in terms of their revenue. They completed their first sale leaseback transaction with Bolero. So this is a experiential bowling company. They completed acquisition of Century Casino's 4 gaming properties, and this is here where I am in Canada. They announced the expansion of partnership with Canyon Ranch, that wellness facility, and they increased their guidance for the full year of 2023. So let's scroll down and look at their financial operating highlights. So total revenues, like we said, increased about 20.3% year over year to $904.3 million. So net income attributable to common shareholders or stockholders increased year over year to $556.3 million from the previous year of $330.9 million. And on a per share basis, this represented an increase of 0.55 or $0.55 from the previous $0.34 per share. Now, this is a REIT, so we are concerned with AFFO or adjusted funds from operation, and that increased a nice 16.4% year over year to $547.6 million. And on a per share basis, this resulted to an increase of 10.7% year over year to that nice $0.54 per year on a per share basis. Now, the weighted average shares outstanding did increase as a result of some of these transactions of 5.1% year over year. So those were the financial highlights. Now let's look at some of the qualitative highlights and how they tried to expand their business. So like they said, they completed the Rocky Gap Casino Resort acquisition with Century Casinos, and those are those 4 property gaming facilities in Alberta, Canada. They expanded that partnership with the wellness facility of Canyon Ranch through their preferred equity investment. It included a mortgage loan and call rights to acquire Canyon Ranch Tucson and Canyon Ranch Lenox. They declared a quarterly cash dividend of $0.41 per share, representing a 6.4% year over year increase in that dividend. They ended the quarter with $510 million of cash and cash equivalents and $807 million of estimated available forward sale equity proceeds. So again, we're going to be looking at this in detail, as well as this increase in guidance, which they did increase for the full year of this 2023. So again, that's from here until the end of the next quarter, which is December 2023, from between 2.17 million to 2.18 million, or $2.14 and $2.15 per each diluted share. So let's look at their CEO's comments. So again, their CEO is Ed Pitoniak, and he said that VICI's third quarter financial performance reflects their sustainable and sustained commitment to accretive growth. Again, keyword here being accretive. I love when executives use that word, or companies, management use those words, because again, you can grow, but growth is not always the main point. You want that growth to be accretive, or in other words, beneficial to the shareholders of your company. So again, their commitment to accretive growth and capital deployment through acquisitions and strategic financing activity, exemplified by approximately 20% of revenue growth and nearly 11% growth of AFFO, or adjusted funds from operation per share, year over year. So during the quarter, In addition to closing on those Alberta casinos, they announced expansion of their Canyon Ranch growth partnership, and they expanded their international presence through the closing of those 4 casino properties, like we stated, in Alberta, Canada. Subsequent to the quarter end, they entered into a new experiential sector with Bolero, the market leader in reinvigorating the program and economics of the bowling experience, and their innovative consolidation and growth model. So in this partnership, they acquired 38 of Bolero's properties and concurrently bolstered their embedded growth pipeline by obtaining a right of first offer to acquire current or future Bolero real estate in the coming years through sale leaseback transactions. Now, again, this right here is great. They're expanding into other growth sectors and into other businesses. But again, this can be a double-edged sword. So what I like to focus on are REITs that pick one niche and just master that one niche. Now for VICI, it's been the gambling sector or the entertainment sector, focusing on casinos and these entertainment properties and purchasing the properties and then leasing them back to the casinos. So what they're doing here is they're actually expanding into some other sectors, such as the bowling here, and then also with Canyon Ranch in terms of specific wellness or healthcare. So again, this is a little bit sidestepping outside of their box. Again, these aren't super material investments to VICI, but they are growing in these sectors, and it is something to be cautioned about, or at least be aware of, because if they do not possess the same competencies in managing this type of real estate for these type of sectors, that can be an area of concern. So just something to watch there. So their third quarter financial results, we saw those total revenues up 20% here. The net income attributable to common shareholders, again at the $556 million for the quarter, or 55 cents per share, compared to the 34 cents per share for the previous quarter last year. Now the funds from operations, those also increased in line as well to 55 cents per share from the previous 35 cents per share in the same quarter last year. And adjusted funds from operations, again, we saw they had a nice uptick here. Again, an increase of 16.4% here. So now we're going to look at their earnings guidance. So they provided some guidance for this 2023 quarter remaining. So that's from now until December 2023. So the company is increasing its adjusted funds from operation guidance for the full year 2023. And if we can look at what that guidance actually entails. So the company estimates AFFO for the year ended December 31st, 2023 will be between 2.170 million, or 2.7 billion, and 2.18 billion, or roughly $2.14 and $2.50 per diluted share. So when we look at this, this was their previous guidance that they had guided to, and this is now their updated guidance. So previously they had guided estimated AFFO, or adjusted funds from operation, of roughly 2.13 billion to 2.16 billion, and now roughly that has been updated to the low of 2.17 billion to 2.18 billion. So again, they are exceeding that prior high here as the low end that they guided to, and guiding to a roughly higher end. So again, anywhere between this range would be good, and that represents an increase in AFFO per diluted share from $2.11 to $2.14. Now that high has now been updated as low guidance here for this next coming quarter of $2.14 to $2.15. So somewhere around this range here. Now, again, with this guidance here, I'm still very bullish on VICI properties. Like I said, it's a significant holding in my portfolio, around 4.05%. And I've actually been buying these REITs as the interest rates have dropped their valuations down in terms of an FFO valuation. Again, properties, as their property values kind of decline as interest rates go up, this is a very sensitive sector, and I'm using this as an opportunity to build up the real estate portion of my YouTube dividend growth portfolio. Real estate actually usually represent about 3% of my total portfolio, as we can see here in the sector allocation. I've actually jumped it up to about 11% now, because I've been trying to take opportunity of these low valuations for REITs. And as we can see here on the individual tabs, or the individual holdings, we can see that VICI properties here, again, I'm down about 9%, but this is only the price. Again, I've been collecting that nice dividend of anywhere from 5 to 6% for this year. So the actual total return here is closer to down about -3%. So again, I am adding to VICI, and again, I am also adding to other REITs in my sectors. Again, one really REIT that I thought was very suppressed in terms of price action was American Tower. I actually bought American Tower. I made a video for that as well last week. I'll leave a link for that in the description below, and which you should be seeing in the top right hand corner now. But basically, American Tower, I saw an opportunity there and I added it. They just released earnings on Thursday or Friday, and they were great earnings, again, pushing the stock up about 7 or 8%. So I've decided to add to these REITs as the price remains low. And then, as my further future self kind of predicts, as the interest rates normalize or they decrease over time, I believe that their valuations will be concurrently pushed back up to regular or normal valuations. So that was my video on VICI Properties. I hope you enjoyed it. If you have any comments or questions, please leave them in the comment sections below, and I will get back to you as soon as I can. Thanks, and I hope you have a great day. Bye. Please note, I am not a financial advisor by any means. All this information is merely for your entertainment purposes only. Please do your own due diligence when investing. Investing is inherently risky, and I am not liable for any investing losses or decisions you make. Thank you. Have a great day. Bye.